Most day traders fail chasing dozens of complex trading strategies, but I've used just one simple trading strategy to make between $5,000 and $10,000 a month consistently. This isn't theory. I'll show you my exact trade recaps with real money on the line. My strategy uses 4 specific confirmations that help remove emotions and guesswork completely. I have grown my account size by 12% this month with this exact framework. Pay close attention to the final confirmation signal. It helps filters out all low probability setups, which usually drains most traders' accounts. Okay, so before I show you guys the actual trades that I've taken, let me first show you the base of the system so that you can understand why I took these trades. So let's start off with support and resistance. Support and resistance is the base of the strategy because that is what I use for my breakouts. So over here we have XAU USD. This is not a pair that I actually trade, but I'll show you an example of how I draw zones and how I find accurate zones. So firstly, you gotta look for relative equal highs and lows. That is the most important thing. So I use a box tool, not a line. A line is not accurate enough for me. So what I do is I find relative equal highs and lows, and you can just pull the box through it. Okay. So here's the most important part. You need to look for any wicks that is sticking out of the zone, and you need to adjust the zone to those wicks. So if you're trading a support level, the most important part of the support is the lowest wick. You don't want wicks sticking through because that's going to lead to a false breakout. And when it comes to a resistance, you need to make sure that the highest wick is as accurate as possible because again, it's going to lead to a fake breakout. So all I do is adjust my zone to the highest point, which is that wick over there. And I adjust the lower of my zone to that wick over there. So now I don't have any wicks that is sticking out of my zone, and I'm confident that I can trade a level like this. So when it comes to a breakout, I know that my zone is going to be accurate according to the low. So here's the most important thing as well. If you're trading support, your low needs to be accurate. If you're trading a resistance, your high needs to be accurate. So the same thing as with this zone, it was a previous resistance, it now became a support. So if we're looking for another zone, you can see over here, there's 2 relative equal highs. That's an important word, relatively equal highs. What I would do is I would then use my box tool and highlight these highs. So there we go. We have a resistance. Now that I know that my zone is accurate to this wick over here, I'm happy to trade it as a breakout. So now that you guys know how I mark out my zones, let's move on to the next confirmation. Okay, so the next confirmation that we are going to talk about is the 50-day moving average. And why is the 50-day moving average so important to me? So remember this chart that we just went over. Okay, so I mentioned that over here we had this high as a resistance. So we were ready to trade this as a resistance breakout. Okay. So that means we will be looking for buys once we have the candle closure confirmation. So when we're trading with the moving average, we're really looking at this. This is my 50-day moving average over here. You can see it going all the way up, right? So that for me tells me that we are currently in a bullish market. I don't want to be trading against the 50 moving average because clearly the market is buying. So why do we want to trade against a buying market? We don't want to be looking for sells once we see price is still trending above this moving average. We'll only start looking for sells once price starts breaking below this 50 moving average. So that means when price is starting to break below the 50 moving average and we have a confirmed support level like this, then that means we can now trade the break and the retest while price is below the 50 moving average, which is exactly what happened over there. So that is how I use the 50 moving average to always be on the right side of the market. So let's go to our next confirmation. Okay, so now you guys understand those foundations of my system. So this is something that I took quite a while to figure out actually. What time frame to trade. So when I'm trading breakouts, you can trade it on a 4-hour time frame, you can trade it on the daily time frame, you can trade it on the 15-minute time frame. But the time frame that worked the best for me was trading it on the 5-minute time frame. That was something that took me ages to figure out. And I'm telling you guys for free because I really feel like this can help a lot of you guys. The 5-minute time frame really worked well for me because the 15-minute, it's good, but it's a little bit too slow for me. The 5-minute was a little bit faster. I enjoy the 5-minute time frame. The 1-minute was way too fast. Like, I did not enjoy trading the 1-minute. It gave me anxiety sometimes. So I found the 5-minute time frame to be perfect. Then we can start talking about the time of the day. Okay, so now you guys know how to trade support and resistance and mark out your zones. You know to trade with the 50-day moving average. That is very important. We're trading on the 5-minute time frame, and the time of the day that we are going to trade is New York Open. So this is New York Open, but also CME Open. So CME opens 30 minutes after the New York Open. So CME is Chicago Mercantile Exchange. That is when the stock market goes live, and that is when NASDAQ, which is the pair that I personally trade, that is when NASDAQ is at its most volatile, and that leads to perfect clean breakouts. Okay, so now you guys understand the basics of my system, how I use support and resistance, how I mark out support and resistance, trading alongside the 50 moving average, trading CME Open, and the 5-minute time frame. So I'm going to walk you guys through 2 of the trades that I took. So this one I taken on the 15th of April, and you can see over here we were trading NASDAQ, the 5-minute time frame. What I saw during this trade was we had this high that formed, there was another high over here, another high over here, another high over here. So this is a good confirmed resistance for me right before the CME Open. We also had another level over here where there was another high, another high, another high. So that was a confirmed resistance that then became a support level and again a resistance level. So this is called a key level. So we had a nice key level that formed right before market open. So if price were to sell and move below the 50 moving average, then I would be looking to take shorts. But in this scenario, price pushed and took out our resistance. So this was the closing candle. This candle pushed above and closed outside. So that is a confirmed break. Remember, if price pushes out and just wicks above, that is not a confirmed breakout. We want to see the candle body close outside of the zone. So price then came back and wicked perfectly into our previous resistance, which now becomes a support level. We then entered the trade as it came back for retest. We used a 30 pip stop loss and a 60 pip TP, so a 1-to-2 risk to reward ratio. And over here you can see we had $2,036 profit. So moving on to the 17th, which was 2 days later, we had a perfect sell. So again, once market open happened, so this is the CME Open candle, we had a perfect support level. So it was those wicks over there, these wicks over here, this candle bodies over here. And again, we want to take the lowest wick, which was this wick over here. That was the wick that we used for the bottom of our level. So when price broke out, you can see over here, price pushed through, candle body closure outside. It came back for a retest. We then took it. Once again, perfect sniper entry. Price just wicked into our zone. Again, using a 30 pip stop loss, 60 pip TP. That was a perfect trade. Ran straight to TP. Once again, I had $2,145 profit. Okay, so now we're going to talk about our last 2 confirmations. So these 2 confirmations really help me filter out the good trades and the bad trades. So you can see over here, I got fair value gap. And why does fair value gaps actually confluence my trades? So if you look at the trade that we took on the 15th, over here you can see that we had a fair value gap. Here's our fair value gap all the way over here, right? So there's our fair value gap. So this fair value gap fell within our previous resistance that became a support. Price pushed up, left a little gap, and you can see how price just came back, tapped into this fair value gap, and that gave us an even better confirmation. But on the same note, if that fair value gap was all the way down here, that's gonna make the trade a little bit more risky for me, because there's a good chance that price could pull back all the way down to this fair value gap and then start pushing up. So that is one of the confluence that you guys have to really watch out for, is if price does break out, is there any fair value gaps that is close to my entry? And if there is, that is going to be a really good confluence for your trade. And if that fair value gap falls below your stop loss, you can adjust your stop loss accordingly to the fair value gap, but don't try and go too big of a stop loss. You don't want like a massive stop. So just be wary of all these fair value gaps. Like that could really filter out a lot of the bad trades. So let's just go and cover the last confirmation. Okay, now for the final confirmation, which is overextended. So what do I mean by overextended? So let's take a look at the chart again. So what I mean by overextended is when price has a breakout and it starts running, right? It does not come back at all. And it starts moving further and further and further away from the moving average. Now price is starting to become extended, right? So that's basically like, think about taking a rubber band. If you stretch that rubber band, you keep pulling it and keep pulling it, and you eventually let go. The further you pull it, the harder it's gonna snap back. So this is basically the same thing. The further you go away from the 50 moving average, the harder price is gonna snap back. So if I am waiting to take a trade over here, let's put down the tool. So if I'm looking to take a long position with a 25 pip stop loss, right? And a 50 pip TP. So you can see over here, price never came back for a retest. So it just kept going and kept going. So my original TP is supposed to be all the way over here at 50 pips. But price has run that 50 pips without me. It never retested my zone. So now that it's been overextended and it already ran my TP, this becomes a really bad trade. I do not take these, and this will help you as well. It will help filter out all of the bad trades. So what happens when price is so overextended? Price eventually comes back and it completely disregards the zone, right? So you can see over here, price pushed all the way up, and now that it's coming all the way back down, it completely went straight through the zone. It just kept going further and further down. So we'll take a look at one more example. Okay, so this is another example. As you can see over here, we had a perfect support level. So price has then broken out, but it never retested, right? So you can see over here, it came very close for a retest, but it just kept going down. So instead of trying to chase the trade, rather leave the trade. Forget about it. If you try and chase trades, you're gonna end up burning yourself. So once again, you can see how price has broken out. It never retested the zone, and it just kept going down. So the further down that it goes, the less probable this zone becomes. And you can see as well how far it's moving away from the 50 moving average. So once again, when it does snap back, it's not going to bounce off of the zone. It's just going to go straight through it. So remember, when price is running and it goes past your initial TP, or price just does not come back at all, if it just keeps running, completely disregard the trade. Do not try and chase trades. We don't chase trades. That is a really bad habit that you guys should try and get rid of. So anyways, that is a strategy I use when it comes to day trading. If you have any questions, you can leave it down in the comments below. I will answer you. And if you would like to join our Discord trading community where I live stream NASDAQ every single day, I will leave the link in the description. I would love to see you then. And I hope you guys enjoy the rest of your day. I'll see you in my next video.